Hey guys, welcome back to the channel. This is the Road to 1 Million Trading the Options Wheel Strategy, Episode 8, the week ending 11/7. It's been a very eventful week with a lot of news, including, and I'm recording this an hour ago, news came out that the government shutdown has officially ended. So, as the title suggests, we bought the dip, and just looking at the overnight trading, it's looking like we made the right play, but we'll get into the review of this week. So, as usual, what is the wheel strategy? The wheel strategy consists of selling put and selling call contracts, also known as writing contracts. And if the stock that you are writing these contracts on dip below the strike price, then you will need to buy 100 shares of that strike price, and you just repeat the wheel until you reach $1 million. So this content is not financial advice. Like usual, please consult a licensed financial professional before making investment decisions. Don't just follow my trades. Do your own due diligence and make educated decisions. So the weekly portfolio update. If you've been following along in the series, we've been having red Fridays but green weeks, and these last 2 weeks it has swapped. We've had green Fridays and red weeks, so I'd prefer the previous rather than the latter, but. Getting into the numbers, 2025 year to date, we are still matching our goal of 1% per month at least, or more. So we are up $28,789, which is still absolutely crazy to me because that's some people's salary. So very appreciative, and have made a lot of mistakes on the journey, but still meeting my goal. So good to see that, but not good to see the red week. So we are down 0.33% on the week, down $864. And I did deposit $800 for my W-2 income into this account. I tried to deposit once a month, but obviously some months more than others. I had a very large credit card bill paying off a bachelor party and a wedding that I went to, so could not deposit very much, but still got to deposit 800. And even though this week had a lot of news, we didn't actually realize any trades. We started a lot that we'll get into later in the video, but the only I say premiums, these aren't premiums, but I didn't want to leave this blank. But we did receive a quarterly and a monthly dividend, so still cash flowing something from our holdings this past week. Again, the goal of this account is income based, so always want something coming in every single week. So the total is $120, $55 dividend from Nucor holding 100 shares, and the 65 monthly dividend that TLT pays. That's 200 shares, so $120 total. The count is sitting at 261,717. So getting into current activity, we bought the dip. Bitcoin dipped under 100K, and I opened up one position early in the week at the $56 strike price is the Bitcoin ETF, which follows the price of Bitcoin. And we also opened two contracts at the 53 strike price. So in overnight trading, this ETF is up about 2%. But it closed right at that $58, $59 mark. So currently in the green on the ones that we bought later in the week, and slightly in the red on that 56, but and different strike prices and different expiration dates. So why did I sell at 56 and 53? I did some rough math, and if you translate this into the price of Bitcoin, I mean, Bitcoin has to go to about 91, 92K for me to be at break even. Right now, it's trading over 100K, so I feel like it's a nice little buffer. The premiums match at least 1% per month, so I'm putting up about $15,000 in collateral, about 16,000. So we'll see where that takes us. Russell 2000. Bought the dip again, broad index ETF of the small caps 2000. This is the ETF that includes very popular stocks. Well, my favorite stocks. One not so much anymore, but Hims and Hers and Sprouts Farmers Market. But also 2000 small cap ETFs, small cap companies, excuse me, that you just see driving down the road and popular companies in the US. So a little stagger here, as you can see. This is where most of my collateral has gone. Staggered right from 243 all the way down to 237. So as you can see, we are right on the 243 because we bought that earlier in the week, but saw some nice bounce off of the support. And Friday opened up 237s, 238s. So kind of averaging down if the market continues to dip. But I mean, we'll see. Anything can happen, all right? But I made a bet that this is going to be a support level for the market. Because there was no true bad news. Like, sure, Michael Burry, the government shutdown consisted, and Michael Burry came out with a 1.1 billion short position on tech, which is also why I play the Russell 2000 because it's not very tech heavy, but it has lagged the S&P 500 in returns because of that, because of the growth angle. But I still like the small cap play, so I'm playing IWM, the ticker for the Russell 2000, over things like SPY or QQQ, which are very tech heavy. So I think this. I mean, this is a calculated bet. I think that this market is just a dip. That it's not a falling. That I'm not catching a falling knife. But anything can happen this week, so we'll see. And as you can see from the total gain loss, pretty much break even in those three. Up, $20, and down pretty bad on that one. But overnight trading, it's above the 243 actually. So we'll see. I'm excited to see where it opens up tomorrow. But again, anything can happen. Overnight trading, there's so much news that comes out. Trump can do a Truth Social, and anything can happen. So, like my stagger, still above the 90-day SMA, and RSI dips in the 40s. So I like the technicals and I like the small cap play. So we'll keep an eye on this and we'll update you guys how this position plays out. If buying the dip is profits. So this is an interesting one also. Again, Michael Burry came out and released a short position against two big stocks, NVIDIA and Palantir. And they both have tanked. And actually on my small account challenge, I opened up a leap option on Palantir, which I know I haven't uploaded any videos yet. But if you guys are interested in seeing a small account challenge, I will definitely upload some videos, but it's more of a fun account. This is my main account. So this is, first of all, I'd like to warn about leverage ETFs. These are short-term trading plays, not long-term investments, just because they depreciate over time with how they're calculated. But this is a 2x ETFs. There's 3x ETFs out there too. So NVIDIA moves up 3%, it moves up 6%. NVIDIA goes down 3%. It moves down probably 7-8% because of how the repricing works every single day with leverage ETFs. So the downside is a lot larger than the upside, but that creates higher premiums. But this stock dipped from 115 down to about 82, 83, and that's when I saw a very strong bounce off of the 87 90-day moving average, at $87, $88. RSI dipped in the 40s, so right around that mid-level. I think this was an overreaction. I mean, Michael Burry is definitely down in the hole with his puts because he submitted the 13 F filing, but I mean, that's from a quarter ago. So I just don't. I honestly don't understand. Like, yes, there might be an AI bubble, and that's why I'm on the more cautious side, playing things like the IWM, the Russell 2000, and small caps rather than the super tech heavy. But I couldn't resist. This was too good of an opportunity. So up about 15% on that position, $30. So we'll keep an eye on it and we'll update you guys. So current portfolio, we are 3 out of 4 on the earnings reports in a bad way. 3, even though they all beat, 3 stocks have gone down on earnings reports. So this past week, Root Insurance had a nice reported earnings, and Root Insurance had a nice run up. I mean, our cost basis is in the high 80s, and the day or 2 days before earnings, right here, it actually hit our strike price that we bought at. That we bought back in early October, end of September, right there, trading below the 90-day, 200-day SMA. So the technicals are not looking very good on this one. I mean, it's just been trading down to sideways. But they had good earnings. This run up was mostly due to Lemonade Insurance having great earnings that kind of rose up every other insurance stock. And I could have sold. I mean, I was in the green about $100, but I decided to play the earnings. No call option open because I don't like to take on that risk in case it goes super good earnings and it goes early in the money. But still premiums are high, so once it gets a little bit higher, I will continue to sell call options, but down about 10% or $180 on the stock. And closed Friday was a very bullish candle here with it dipped in the 70s, and very buyers came in, a lot of pressure, so I'm expecting it to test my 90 again strike price, and I'm gonna sell a call option once it does. So keep an eye on this, but again, using a lot of these negative long-term holdings, it's already November for tax loss harvesting for year end. So this is how the total portfolio looks like. We have one more earnings, which is Occidental, that we're going to go through. But yeah, no major updates with Nucor Waste Management, so didn't decide to put them. Did open up a SoFi put, but just a small position, $2,500 in collateral, which I'll sell this week because it's already 25% profit. So we're sitting at 26.17%, slightly above last week's update because of the deposit this month from my W-2 income job. But again, matching my 11% goal. And yeah, sitting on a little bit of cash available, 23,000. So we'll see. We'll see if buying the dip is worth it or not. I'll update you guys next week. Thank you for watching, and I'll see you guys next time.